Hi, all. Welcome to Cryptonite. I'm Sham and I have Dr. Tejasvi with me. This is a roundup of all things crypto, and it's been a couple of months since we, did anything on the crypto side of things. I'll let Dr. Tejasvi take it away, and we will discuss everything from the crash in the crypto markets to some DPEGs that are going on and Zcash and so on. So, Dr. Tejasvi, please take it away.
Hey, everybody! I hope you have your pegs ready because we need a couple of pegs to to go with this to go with crypto stuff. Yeah. So what's happening? There has been a few things happening. The market has been traditionally at this point of the cycle, as they call it, should have been kind of up and to the right. But of course, as you know, the past is not an indicator of the future. So things have been pretty bad in some sense. Bitcoin even went below $100,000 for after a while, maybe like 6 months or so. Ethereum has retraced all its gains from 2025. So have all the altcoins. And this whole supposed altcoin season that is supposed to have started when Bitcoin peaks, after 6 months, the altcoin season is supposed to start, has not started. There's no altcoin season to speak of. So it's been a bit, I would say, frustrating for most crypto traders, definitely some investors. Bitcoin maxis are kind of holding on. They're just doing their own thing. Folks like me have completely moved on in some sense. We look at other things in life. I'm kind of doing a marathon and I'm planning for other things. So crypto is not on the top of my head anymore. So I would recommend kind of that as the most peaceful way to live with this, where you think of crypto as like a part of your smaller portfolio, and you kind of keep it on the side and don't look at it for a while and kind of move on. Anyway, that's a different discussion for a different time. So one reasonable thing that people have been talking about over the last couple of weeks is kind of Bitcoin's IPO moment. What I mean by that is when a traditional company kind of goes through, when a traditional startup like Google, Facebook, they all went through this IPO moment. Where the IPO was this big bang where all the kind of insiders were able to cash out at a very good level, and then the company kind of stabilized for a long time. And then the new guard came about, and then the new kind of management also was there, and they had to reinvent the company and kind of take it forward from there. Or in some cases, the old management stayed back. They were motivated and they took it forward from there to the new products, new vision, digging down into the strengths and kind of doing the next level of things. So Bitcoin has been kind of at the 100K. You can think of it as the IPO moment. The OGs are cashing out. They're booking profits. They're going on vacations, whatever they want to do. And it's consolidating around them. You have Wall Street coming in. You have investment bankers coming in. You have all these financialization kind of products happening around Bitcoin. So it's kind of this maturing of the original cypherpunk product and or cypherpunk product, and now it's kind of doing its financialization thing. This narrative is reasonable. It's a bit depressing, but it's reasonable, I think. So this is the one I believe for now, and we'll see how it goes. You would have kind of said this, and just before you go, Sham, just one more point. This would have been okay if Zcash had not pumped like there was no tomorrow. So Zcash, for those who don't know, is a privacy coin that came about in 2016, I want to say, or 17 maybe, if I'm not wrong. And I kind of was eagerly watching and waiting for eagerly waiting in anticipation for its release in 2016 or 17, because its inception was kind of surrounded by this mysterious process called the ceremony, and there were like 5 people who were picked by the founder to do a certain special act, like a physical act, to go with the ceremony. So they were supposed to bring like a computer into like this kind of special place in Colorado somewhere, and they were supposed to do some software with it. Like so you load a specific piece of software, you run some code, you generate some numbers, you write the numbers on paper, and you give it to the main guy. And then you have to go and take the computer and destroy it in a way in which nobody knows where it is eventually. And 5 of the ceremony participants, out of which 3 were public figures and 2 were unknown. And they were revealed like in 2021 or 22. The unknown figures were Edward Snowden, which is fascinating, and one more guy who is also like fairly important in the crypto circles. And the other 3 were like the founder himself, Zuku Wilcox, and Peter Todd, who's a Bitcoin OG, and a few others basically. I mean, it was like a lot of drama, a lot of kind of fanfare. And it was truly innovative protocol. If people want to really follow this rabbit hole, Tornado Cash, which is the money laundering protocol or mixing protocol on Ethereum, was built off of ideas from Zcash. So anyway, Zcash is this privacy coin that came about in 2016. It kind of went up to around $500 back in 2018 cycle, and since then has been zero for the last 7 years. The company shut down. The company which promoted the coin shut down. The founders moved on to other things. It was just like a ghost town essentially. And over the last 3 months, it's just pumped like crazy. It's gone up from $20 to like $500 or something. That's like a 50x, right, or whatever, 25x. So it's inexplicable. In the whole sea of reds of crypto, Zcash is the shining green right now. And we really don't know what explains this. Some people say the Bitcoin people are selling Bitcoin and moving to privacy coins because privacy is the new hotness. But if that was true, then other privacy coins should have kind of taken off, like Monero and stuff. So they are kind of flat. So this is one of those things that I can't explain it other than short float or small float and people being able to kind of manipulate the market with their huge buys. And some big whales are positioning themselves in a way in which it seems like they might be manipulating the markets as well. So that's kind of my take on it. But anyway, this is the situation for the last couple of months.
Right. So, couple of interesting factoids around whales selling Bitcoin. So, one of the underlying theme is they're selling Bitcoin into the iShares Bitcoin Trust and getting the iShares ETF shares, in return. The idea behind that is obviously liquidity, and also, they don't want other people to track their wallet, right? So once you have your iShares, stock, you can obviously sell it in the exchange, and nobody will know that you've sold out of it. So there's an underlying theme there as well.
Except the government knowing about it.
Yeah, the government obviously knows about it. I mean, at this point, under Trump, like who even cares, right?
Yeah, true that. No, so there is a lot of speculation on who is actually selling because the people who are buying are very clear. So you have MicroStrategy buying, you have some of these digital asset treasuries buying, you have the ETFs buying, you have the classic dollar cost averaging flow coming in. The general narrative around money printing has not stopped. And risk assets like Palantir and Tesla have gone up considerably. So the reason why Bitcoin has not kind of kept up with that particular trade is a bit surprising, to be honest, especially given that gold has had this insane rally. Yeah, it's unknown. I'm not an expert. I don't know really what's the reason. I just carry on doing other things in life while dollar cost averaging.
Right. So another theory around this is, see, when the flash crash happened a couple of weeks ago, and since then, the ongoing kind of correction in the markets, people have been pointing out that the notional losses that you see, right, is kind of misleading because, they said, some $19 billion were liquidated in a single day. But that $19 billion is the leverage notional, right? So it's not the actual, cash that was in play. So people went and bought perps at 50x leverage, on Coinbase. And, if you did it on a DEX, it's even higher. Like, there was a 100x, 100x levered whale on Hyperliquid that everybody was tracking. Now, when you have like $1 and then you buy $100 worth of Bitcoin and then you lose all of that $100, did you actually lose $100 or did you just lose $1? Right? So that has definitely been kind of, okay, it's damaging to the sentiment, but it's unlikely that people actually lost a ton because it was not their money to begin with. And these are all non-recourse, indexes. So like who even cares, right? On paper, you were a millionaire and now, you are zero, that you always were. It doesn't matter. And that flow is kind of has run its course. So the you like leverage is also a kind of like a sine wave, right? So when things are bullish, everybody levers up and they run it. And when things turn around, you're going to have a bit of a bloodbath, and things calm down, and then again the cycle continues. So I think we are at maybe at that point in time. um, and I know, and you mentioned something about Bitcoin's IPO moment. So look, the examples you gave, Facebook, Google, etc. The new management did take the company in a different direction. Uh, but Bitcoin being Bitcoin, like what is a new direction, right? So
No, I
it's just
agree with you. It's a very flawed. It's not a fully accurate analogy. It's a flawed analogy. Uh, Definitely, in terms of new directions, some people will argue that now that institutions are on Bitcoin, or not on Bitcoin, but are holding Bitcoin, there might be some interest in them wanting to use it for other things. So there are people talking about settling stable coins on Bitcoin and stuff like that. So that chatter has not ended, to be honest. So there is theoretically a new direction possible, but I would doubt it a lot because Bitcoin's value proposition is that it doesn't change direction. If it changes direction willy-nilly, it chooses to be what it is, or it stops being what it is, and that is not worth the position it's in. So yeah, no, I agree with you that direction change is not something that I'm using the analogy for. It's mostly about the idea of financialization and the OGs cashing out is the main point. But yeah, take it with a grain of salt. It's one way of looking at it. I really don't know any other way of explaining it because, as you said, it just could be just a normal cycle kind of going through its motions.
right. And leverage and dexes make everything sort of extreme, right? So when you have 100x leverage, it's really mind-boggling in terms of from at least from a traditional finance kind of thing. The max leverage you'll get on Nifty is like 5x, right?
And any
Um,
reasonable place will be 5x.
yeah, and that itself is extreme, given its volatility. So, applying 50x or 100x to a 100 wall asset like Bitcoin. So, these kind of things, you should just assume that this is noise. This is part of the, Brownian motion or whatever, that
Yes,
kind of
yes.
wall.
And specifically, when you mentioned the flash crash, can you go into a bit of details, like what triggered it? Was it like some Trump tantrum, or was it a tariff tantrum? I don't remember exactly what happened. Was it October 18th, 19th?
Yeah, so it was definitely Trump who kind of, I wouldn't say triggered it, but he said tariffs on China is going up because of that rare earth thing
Oh
that
yeah,
they
I remember now.
and that coincided with the crash, because I don't personally see the connection between that between that and the crash, but maybe there was a whale who panicked and dumped a bunch of crypto, and that was enough to create the cascade given the leverage involved. And what is surprising about this is uh, Hyperliquid, which is turning out to be everybody's favorite DEX, was had great uptime, right? It never went down. Whereas Binance, which is everybody's hated sex, is had a whole bunch of glitches. Their data feed was nuts, and they themselves kind of hid a lot of liquidations and so on by not uh, giving a true picture of it through their data feed. And they pulled a lot of nonsense like this, and see, a lot of people kind of wrote threads about CZ being a slimy fuck, and most of it revolved around the fact that none of what he did was transparent, and a lot of people lost a lot of money. But on the Hyperliquid side of things, people suddenly woke up to the fact that there's a thing called automatic deleveraging,
Yeah, I had
right?
never heard of it before that day, by the way.
Yeah. So, everybody kind of glossed over, I think, the terms and conditions and skipped this part. So, For those who are not aware, simply like obviously there's a huge big technical reason behind this, but to put it simply, ADL or automatic deleveraging is how the exchange protects itself when there are highly levered players and there's huge market volatility. So what that means is, let's say, for okay, taking a step back in every perp, since it's a derivative, every seller has a buyer, right? So let's say, I have shorted 100 bitcoins, and somebody else has bought 100 bitcoin. Now, both of us are in hyperliquid, right? Because it is the perp that we are trading. Now, what happens when Bitcoin tanks? Now, I'm hugely up, right? It's gone down. But the guy on the other side can just walk away, right? So what Hyperliquid does is it liquidates both of us, right? Saying otherwise, what happens is the exchange has to take the loss if the other counterparty goes away. So in order to prevent that, they say, okay, beyond a certain limit, we're going to do automatic deleveraging and bring down the total leverage of the system down. Now, technically, when people read this, they thought this was a very fringe case and it won't happen to them in their lifetimes, right? Because there's no traditional finance equivalent of this. Okay, because when something like this happened, that was the Lehman moment, right? So Lehman was a counterparty to a lot of other Wall Street banks. So it went down, it threatened to bring all the other banks down. So the Fed stepped in and made the counterparties whole, right? But what happens when it's a DEX? It's all decentralized, lawless jungle that we have created here. So how do you bring the leverage of the system down? So you do an ADL. Now, a lot of
just
guys.
to be clear here, in ADL's case, the profitable party and the unprofitable party both are closed.
Yes.
Okay. So if I'm profitable and I have gone to drink a coffee expecting more profits, while I come back, I might just figure out that my profit is booked and I'm in cash already.
Yeah.
Which is not terrible, unless I have taken a loan or some other third party thing that the exchange doesn't know about.
Right. So the worst part is not that. So the worst part is, you would have taken the notional gains and pledged it somewhere else.
Oh,
right?
No, why would I do that? Because I am a crypto trader.
Yeah, that's crypto degen trading 101. You build a pyramid.
Are you saying that when I have profits that I can see on my exchange, I am just not happy enough to go for a walk? I have to take the profit, the notional profit, and then use that as leverage and get something else somewhere else.
Yeah, quite obviously. Because see, you're thinking of this as I'm a hedge fund manager and I have like $1 billion in assets, so I'm going to do no. So these guys typically they have a few $1,000s in actually the personal cash, right? And they want to turn it into $1 million within a year. So this is how you do it, right? So you keep levering up and hope that it doesn't all fall down as Jenga.
Oh no.
So anyway, so that was part of the reason why people were shocked that this such a thing called ADL exists. And it goes to show that most of crypto, it's not new. It is just traditional finance without any of the guardrails or the laws or the stuff that actually makes the system stable.
Yeah,
right?
The backstops and whatever, right?
Because you can argue that having a buyer for every seller is the same thing as any derivative traded on an exchange. But what's missing is there's actually a clearing corporation, right? So your counterparty is not the person who sold it to you or who you sold it to. It's actually the clearing corporation. They are the final counterparty to all this. So they have an insurance fund. So they have a way of managing defaults. So there is a certain waterfall involved. So there are rules, regulations, and so on and so forth. Whereas over here, the DEX does not want to take the responsibility of this clearing corp, right? Because they're not in the insurance game, so they are in the make people trade a lot so that we can knock off some gas fees trade, right? So the last thing they want to be is this stodgy old clearing corp and guaranteeing trades. Like, what the hell is that? And how do they even hedge that? And where will they hedge that, right? So um, that's kind of
But here's
the
the
tech.
question for you as a finance geek, right? Looking at what crypto is kind of figuring it out in real time, does it give you new appreciation for all the stuff that TradFi has done?
See, while TradFi itself is not perfect, right? It would have been better if crypto built on top of this instead of trying to build something in parallel and learning in real time why TradFi has this, right? So like you could have just copied the template and cloned it and then made it better.
No,
But
I have
that's
a
not.
feeling that some of these things exist in symbiosis, in the sense that, for example, TradFi has market opening hours and closing hours, and weekends are shut down or whatever, right? And you have the ability to do circuit breaking and stuff. I think these things are kind of necessary conditions to making some of these other institutions work. In crypto, you just don't have a possibility of doing that, right? So maybe some of these things will not work one to one at all. Maybe, I'm not sure.
Yeah, that's my point. So, there is nothing wrong with having an official end of the day, and you can do it with crypto, right? Like you can just say the official end of the day is UTC 000, right? So, and then, the whole world follows that. It is not inconceivable that before building it itself, if people have put some thought into it, it would have just become a de facto standard.
Interesting.
So now it is too late.
Yeah, now it's too
Now,
late. Now the cat
yeah,
is out of the bag.
yeah. So and not just end of the day, right? So even like all these circuit breaking and all that, a centralized exchange can obviously implement that. And the problem is actually there's no governance body which says all exchanges should do this. So therein lies the thing. And people talk about smart contracts and all that, so you can basically bake it into Solana or Ethereum itself. So because it is obviously self-aware, it knows where things are being traded. So if it sees new blocks being created at much lower prices, it can obviously pause that. So it can be built at the L1 itself, instead of making L1 kind of transparent like that, pass through like that.
No, what happens is then you'll have to rely on a pricing oracle, and oracles are always known to be vulnerable to third-party attacks. And then you are kind of putting yourself at the mercy of the oracle integrity and stuff like that. Like, for example, I think some protocol, I forget the name of the protocol, like 6 to 7 days ago, Chainlink reported a wrong oracle price for some ETH derivative, WS ETH or one of them.
I think it was USDE.
Yeah, no, not USD. USD Athena is different. That was Binance fucking up in during the flash crash. But this was a separate event, happened like 6-7 days ago. There's some ETH derivative, not derivative, an ETH based stablecoin or ETH or a wrapped ETH, let's call it, was reported at like $2 million instead of like whatever $3,600 or whatever. And somebody was able to borrow that and use it as collateral and get a lot of other assets and run away with it. It happened for like 3 minutes, and that was the end of that particular protocol. So, and this is because some oracle reported a wrong price, right? So yeah, I hear you. I hear you that it's. I think TradFi and governments have existed so closely together over the last 120 years that somehow we have come to kind of expect them to work without obvious abilities to cheat or obvious abilities to manipulate. Though we don't know whether it's happening in the background, in the so-called permanent government, or what is it called, dark state or whatever it is, deep state or whatever. I don't know. But I'm just still curious. whether crypto will eventually reinvent TradFi in a more interesting way or a more efficient way, uh, maybe more explosive as well, which might be a necessary condition to get to the end state. I'm not sure. It's fascinating though. It's good to see this happen in real time.
Yeah, I mean, it's obviously fun because we don't have a ton of capital
Yes,
stake to this.
yes. we
Uh,
have we have like this faraway seat to the arena, and we're just like having a good time.
Yeah, and that is one of the other reasons why crypto will always be fringe, right? So people keep saying, "Oh, it has entered the mainstream, entered in the mainstream." My brother in Christ, this is not the mainstream. Okay, so the mainstream is Vanguard saying, "I'm going to offer a 60/40, thing, and instead of bonds, I'll put staked Ethereum there." Right,
Wow.
so that's the mainstream. So that is when you will see trillions of dollars flowing into this asset. But that will never happen because the whole system is running on duct tape and you know and chewing gum.
Yeah.
So
Speaking of is the right one.
yeah. So in spite of it, in spite of crypto being new, right? They have absolutely messed up the implementation. So if you look at, so for example, Nasdaq, right? Nasdaq provides tech for all the other 20 odd exchanges that run in the US. Okay, so they are the technology provider, and why are they a near monopoly in this game? Because they have fine-tuned their systems to handle volume, to make sure that people can't jump the queue unless that's
By design.
an order type that they're providing, right? And they have all these things in play. Make sure that a certain for example, a certain subscriber cannot do some things that he has not subscribed to, right? Even though it's you would think that it is just orders flowing in and trades happening. It is not. There's a whole bunch of stuff around it that makes the system stable.
Yeah, and also
Um,
all of the other performance stuff that we take for granted, right?
Right. And now, then you hear about how Binance runs on US East 1, right? Or with no backup. Or everything is in one data center somewhere. So if somebody figures out which data center, so there is an interesting way in which you can ping their servers and figure out which data center they are in, and you can go and
Co-locate.
get co-locate there without paying them any fees. All sorts of nonsense happens in crypto, which just goes to show how immature the whole thing is, right? So unless you have to kind of learn to wear your big boy pants and do all the hard stuff that TradFi has done over the last 100 years.
And
And
here's where whenever I wear my crypto hat, I want to talk about what are the possibilities of whatever this is. But then the more you talk about this, the more the Bitcoiner in me wakes up and says, yeah, this is obvious. This is how it should be. Because if you want a centralized settlement system which is efficient, you need a centralized settlement system which is efficient. A decentralized system can never be this by definition. And it's Bitcoin trying to be something else. It's like a different idea altogether. You're not like trading it with 50x leverage. That's not the point of it. And somewhere the memo got lost, and things became something else. And I think that's good because it'll shake out in a more natural way, and people will figure it out. And people will figure out that perp trading is only going to go that far, and then shit will get right in the world.
yeah, but that doesn't stop a whole bunch of staking ETFs.
Oh yeah,
I guess.
definitely. Yeah, in recent news, I think Bitwise, which is like a company that does ETFs and also indexes and stuff, they launched a Solana staking ETF, which is interesting because for a long time SEC did not allow ETF holders to stake. the coins into like the protocol itself and earn a yield on it, right? So this was a big deal because the SEC is very friendly towards crypto. This was approved very quickly, and yeah, Bitwise went with it. It became quickly the most traded ETF in crypto for a few days, even beating the iShares Bitcoin ETF. But I think now it's kind of back to normal, and now with the kind of crypto markets being a bit down, things have stabilized a little bit. Just speaking of ETFs, though, it's mind-boggling to me that in 2024, when the first Bitcoin ETF was announced, like I was really shocked about that happening. But now it's like, yeah, sure, well, why not, right? There are ETFs for every random thing, and Zcash ETF is coming soon, so it's not surprising.
Yeah, so not only ETFs for everything, so you have leveraged ETFs on everything. So there is one punter who has done 5x ETF on single stocks. So you can buy 5x Tesla ETF, 5x 5x Nvidia ETF. So it has just gone bonkers. On one hand, SEC wants to protect retail investors, and makes them go through hoops before they can get a derivative tradings account. But then you have these fully funded, ETF wrappers around the same thing, and more or less guaranteed to lose money because of the volatility drag.
Yes.
Like at 5x, even if the underlying eventually does go up, you would have lost so much on the wall drag.
Yeah, you would have been liquidated multiple times over.
Yeah, and people buy that thinking, oh, it's an ETF, so it should be good.
Yeah, they don't really know what a 5x ETF means, and what does like a 10% move in a 5x ETF means for your NAV, right?
Yeah.
Yeah, no, it's quite amazing how you would think that the SEC again, or SEBI in our case, they kind of say that they were protecting the small investor, but invariably end up protecting the middlemen and the people who issue the instruments, and kind of make it, I don't know, man. Sometimes it feels like, you were talking about how TradFi kind of has guardrails for a reason. Sometimes I look at the guardrails. I look at Tesla trading at 200 times earnings, and somebody approving a $1 trillion pay package for Elon Musk. And I'm like, who is in the crazy land right now? Is crypto the crazy land, or is TradFi the crazy land, right?
Right. So the difference is basically what is considered acceptable behavior, right? So Musk getting a $1 trillion pay package raises eyebrows, whereas somebody raising $200 million and rug pulling the next day is like considered okay, fine in crypto. So it's
which founder ran away? It was I am surprised I don't remember the name right now. So you do you know that the Plasma protocol, which is like a Bitcoin derivative protocol, again nothing to do with Bitcoin itself, but like a Bitcoin based some protocol on top. The founders raised 60 million and have been missing for the last couple of months. So I've not followed up with the story though. So we'll keep this for next time. I have a feeling it will be fun to unravel this one.
Right, and not just that, like they will issue a stable coin and or maybe give you a yield and take that money and just run a hedge fund, right? SBF went to prison for this, but
Hey, for how long? For how long is he going to stay in prison is the question.
Yeah.
Given how we have seen the US government operate these days, crypto people being in prison for too long seems like I don't know, maybe not the case. For those of you who don't know what the joke is, CZ, who is the founder of and the CEO of Binance, he was maybe falsely, in my opinion, charged for money laundering, terrorist financing, child sex abuse, all the usual litany of charges that people bring against people they don't like. Because there's an exchange that is being used by other people, and they think that the people who run the exchange are the ones who are doing the actual crime, which is not true, obviously. Again, you could argue that they should implement protection against all of these, but Binance might have not done it the way it was supposed to have been done. But instead of being fined for it, he was put in jail for it. From what I know, he was the first person or the only person ever to go to jail for the Bank Secrecy Act or whatever. Anyways, So he was put to jail last year. He spent 4 months in prison and he was out on bail. But now I think Trump has officially pardoned him. And famously, Trump did not know who he was. So he just pardoned him because, I don't know, David Sachs told him to pardon him or something. I don't know what exactly happened. But anyway, FTX, Sam Bankman-Fried, on the other hand, was very big friends with Democrat leaders. So maybe he will not be on the good side of Trump. So who knows?
Yeah, who knows? But the problem is what he did was take money from his exchange and funnel it to his quote unquote hedge fund,
Hedge fund,
where
yeah.
he basically did whatever he wanted to do. And the same thing, has been done by Stream, right? Stream, which was supposed to be a DeFi protocol. They took the money. They said they promised some yield, and then they took that and gambled away on the other side.
No, but
And
in an ideal world, how are they supposed to generate the yield?
no, it's impossible to do it in crypto, right? Because there are no productive assets. So
Yes.
whatever yield you see in the real world comes because people sweat for it.
People sweat for it. People burn midnight candles and do real things.
Yeah. So that's what productivity. I mean, people being productive is what creates returns.
Yeah.
But in crypto, it's just the same money going around and around in different ways. So
And finding the
you
next
can't
victim, basically. And also finding the next victim.
Yeah. So it's not yield per se. Anyway, so there are a few of those Stream, Elixir, Stable Labs. So they're all caught with their pants down.
Yeah, this happened. It's not the first time happening, by the way. This happened with Voyager. This happened with a whole bunch of other people. The other one, which was the other one? It started with the B. BlockFi. It happened like in the last cycle. We had a bunch of people who basically, and the folks from Voyager went to jail as well, right? Or at least they were. I think the FBI is looking for him, but he's missing somewhere. David Mashinsky or somebody. I forget his name. Yeah, this is like not surprising. It's happened before because chasing yield in crypto is tempting, and shit can go wrong, and then you're kind of down, right? So yeah, I think it should happen more, and people should realize that there's no real yield in crypto. It's mostly just being able to protect your money if at all you're going with Bitcoin for. Otherwise, stay the fuck out of crypto in general, right? It's easier.
Right. So the thing people fail to understand is the yield that they get is basically people, borrowing your coins, and speculating with that, right? So if that speculation goes wrong, there is no centralized counterparty to make you whole.
Yeah.
That is done. So it's kind of like peer-to-peer lending, which is and the TradFi invented banks to make sure that this peer-to-peer thing doesn't sink your whole savings, because of one default, right? So spread the risk around. Only way to do it is through a bank, and from there, all the regulations and the story follows. So you want to do
no.
something.
I think you need to actually spend a bit more time on this. I think we understand this like very easily, and I have just found out that I thought everybody kind of understood this. That the reason banks exist is that they pool the deposits and take calculated, measured, judicious risk with it, where they vet the borrowers, and then they spread the risk on top of that. Which peer-to-peer lending is really difficult for them to do it. And also banks know the people who they are, and there is a social pressure, there is reputational risk. It's not just an anonymous public key on the internet, right? You're not giving a leverage, you're not giving a loan to a public key. You're giving a loan to a person with an address, with kids, who's come to the temple or or he's like a person with real credibility. I think this message gets missed out on it, like how the real traditional system came out to be in the beginning. The bootstrapping of that system is not understood very well by people right now. It's just, we enter the world where everything exists already, and we try to think that that's how it should be. It's not how it should be. It evolved in a very fundamentally difficult way. Like I remember this amazing story. Maybe you have heard of this as well. You're from the area, you will know this. Like when Canara Bank was being initiated, in South Canara area. The guy who founded Canara Bank, I don't remember his name, some Pai or Kamath or one of these South Canara names. He apparently went door to door asking for people to put deposit in his bank. And he would give personal guarantee because he knows the guy from this Balaga, Sangha, whatever, some association or whatever. And he personally went to every bank, every person's household, and collected like 100 rupees, 50 rupees as deposit. And then he would offer it as loans to people he knew who were in business. And he literally made this happen. Like he was the network router for the peer-to-peer lending. And a very inspiring story, right? And Canara Bank is a kind of successful bank. And then the government nationalizes the bank in 1975. And when I read about the history of it, I get so pissed about this. Like you have this sweat equity put by one person to build up this network, and then you casually come in and scoop it up. So when you see that, you again want to cheer for Bitcoin because you don't want the government to scoop it up. So though I love the idea of TradFi because you know the people, you put money to work, lending means eventually productivity. You appreciate all of this, but again there is an Indira Gandhi waiting somewhere to pounce on it, right? Like Indira Gandhi dipped into LIC funds to bail out the government like infinite number of times. What is to prevent that from happening, right? We assume LIC is going to be capitalized forever. How do we know that? So I see that, and then I'm like, okay,
it's capitalized with fear.
I know, and that's what I mean.
So see, a couple of things. One is, what you're talking about is socialism. And if you look at a couple of new proposals in France, Netherlands, and UK, they actually want to tax unproductive wealth, which is
I read about this.
Which is wealth just sitting on the balance sheet, not doing anything, and Bitcoin is part of it, right?
Oh, definitely.
Yeah. So you're not escaping anything. Okay. So I'm speaking from the point of view of India, where you can legitimately say that urban inflation has never gone below 10%. Okay. So everything from branded drugs that you need to rents to school fees, this aggregate stuff, statistics that you read lies, because in urban India, inflation has always been high. So you obviously need to keep putting your money to work. It is, if you keep it under your mattress, it just loses thing. So a lot of people realize this, right? So instead of spending $1 million to buy a 2-bedroom house in Mumbai, you can buy the same thing in Portugal or Spain and get their citizenship. So a lot of people did that trade, but now they're caught in, so out of the frying pan into the fire, because now that they're there, the government has come up with other schemes to extract money from them. Because they don't have money to pay, their own citizens, healthcare and this and that. So it is a worldwide thing. It doesn't matter whether your savings are in Bitcoin or in rupees or in euros or tied to real estate or or yachts. The government will find a way to extract money out of you. So it's a sad, but
it's a tautology. You can't escape it.
Yeah. It's an inevitable thing. So they will come for your cash, they will take it, and you will not be able to do anything about it. Sometimes they will tell that to you on your face, like how the UK is doing.
Sometimes it's inflation and it's just you don't even know it's happening.
Yes.
I was wondering about this. Just as a question, like a lot of the influencers these days are calling all these AI trades and all of them as the debasement trade, like all the gold going up, just the Nasdaq going up crazy. Do you see that this is a debasement trade? Is it a thing in your opinion?
Look, investing is always a debasement trade. Okay, so
yes, I agree.
Like if money never lost its value,
you would just keep it under the mattress.
Yeah. So that's where everybody thinks that 2% inflation target is some number handed down by God. It isn't.
It's the New Zealand central bank which came up with it in what 1965 randomly, right?
Yeah, and they pull it out of their ass as well. So it is not, something there, but everybody hooked onto it because it makes the world go round, right? You need to incentivize people with savings to take risk. If you have deflation or zero inflation, there's no incentive
But don't
to
you
do
think it's
anything.
morally wrong to say that? So asking somebody not to kill somebody, let's say somebody wants to kill you, the government says you can't kill somebody because that's a different person, he has different rights. But let's say you are just sitting on your own ass doing nothing. Asking you to do something, isn't that like morally wrong?
Look, when it comes to money, it is not. So money doesn't exist without the government. Like money can't exist without the government. So they can do whatever the hell they want to do with it. Now,
Yeah,
if you
I find that like fundamentally so unsatisfying and so wrong.
you have to go all the way back to hunter-gatherer society, for your logic to work, which is if I just want to sit here and I'm, and not do anything, I should be allowed to do it. That is, hunter-gatherer society is what you're describing. But ever since we became an agrarian society where we, and division of labor and storage of grains and protection of those grains, then the unholy alliance between priests and kings,
Yes.
and the need for a standing army that needs to be paid. So we have long since left that situation where we could just say, I want to just sit on my ass and I don't want anybody to bother me. So, and we have gone too far ahead on that line.
Yeah. I hear you, and I get it, and I know you're right, but it still bothers me.
Right. So,
Anyway, on that note,
yeah. So on that note, I guess we'll wrap this up with something that our Vijayan said back in the day. There are no simple solutions to complex problems.
oh, definitely not. These
Yeah.
are way too complex. Way too complex. So let's see. A bunch of C++ code, cannot really solve it.
Absolutely not.
On that note, all right, guys. Have a good November, and we'll see you guys soon.
Cheers. Bye.